Hello traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for December 17th, 2017. It was a pretty crazy market this week in the currency market. Even though the ranges were fairly tight, there was a lot of whipping around, a lot of central bank activity, and we're going to talk all about that and what to expect in the week ahead. But before we do that, just want to mention, if you haven't signed up, make sure you do. You can try ForexAnalytix for 10 days, and it's only $1. You just click on this button right here to get started. Once you do that, make sure you download the mobile app. Also, click over here to get into the chat room. And if you are a semi-annual or annual subscription, you can interact in the chat room. You can chat with everybody. Or if you've been using ForexAnalytix for 6 months, if not, you can observe in the chat room. So this way, when you're on your trial, you can see what we talk about, because that's where I spend most of my day. And all of us traders, we're in there talking about, fun things, and then the markets when it's moving. So anyway, come check us out. All right, with that being said, let's move along. So it was a pretty volatile week, and the ranges were fairly tight, but some pretty key developments happened technically, and that's why I want to spend most of this video talking about the dollar and the ramifications of what we saw. So first of all, let's talk about the euro dollar. The euro dollar had a pretty whippy move this week. We were, near the lows. We rallied after the FOMC. We came out of a descending wedge. We rallied, stopped at it was a 618 retracement, and then quickly reversed from the ECB decision. And then on Friday, we closed near our lows as Congress is moving the tax plan, and it looks like the House and the Senate both agree, and there's going to be votes early next week. Probably get the tax plan to get the president to sign it sometime towards the end of next week, and so the dollar strengthened as a result. So the euro dollar is at a very interesting spot, but because you can see this minor head and shoulder that's developed here. We had one previously, and it didn't follow through. I am looking at the euro dollar where it could actually continue lower here, but the question is how far. Are we going to get like a false breakdown like we've seen before? I'm not sure. I think we could actually see a little bit more downside in the euro dollar, and there's a couple reasons why, and I'm going to talk about those here in a moment. But let's take a look actually at the dollar index, because this will give you a better view of why I think the euro dollar can go lower here. But again, the question is how far are we going to go? So let's take a look at the dollar index. Okay, so the dollar index, and I want to look at this chart, this daily chart. I want to point out that the dollar index has really been under pressure the whole year. I mean, you talk about when President Trump was inaugurated was this day. We peaked and we reversed. And all of 2017, the dollar's been in a downtrend, as you can see displayed by this blue line. Now what we're doing is we're actually pushing up against that blue line, or that downtrend line, and you can see early in the week, this week, we stopped at the 618 retracement. We reversed following the FOMC, but then following the ECB, the dollar started going higher, or as you guys know, that the euro started moving lower, and the euro makes up for over 50% of the dollar index. That's why it's heavily weighted, and it looks just like the inverse of the dollar. But this is important because if you look at what the dollar has done this whole year, when we rallied off of these lows, we didn't even hit the 38% retracement, which comes in around 96. So now I'm going to take you over to the dollar index, the chart where I can draw on it. I'm going to draw on this just to give you a better understanding of what my thought process is here. So you can see the 618, we stopped at the 618, we came down, and then now we're back testing that downtrend line. Now if we go back and test the 38% retracement, if you think about this on how far that is, that could actually lead us to, and let me clone this trend line here, and I made this a different color so this way visually you can kind of see what we're talking about here. The dollar index could have a longer term bear flag pattern, because if you look at like the weekly chart, gives you a really good understanding of this. The dollar index had a false breakout at the end of 2016. We reversed, and false breakouts usually lead to breakdowns, which we got this breakdown right here. Now, if you take this, you can see this teal. I made it teal specifically so you guys could see it. If we bounce to 96 in the dollar index, we are still developing a bear flag pattern. When you have a shallow retracement like this over the course of, in this case, over the course of a year, that really leaves the possibility longer term for a move lower. It's still possible. So I look at the dollar and I try to think about what are the things that are upcoming that could really power the dollar higher from where we're at. Well, currently we have the tax legislation and the tax bill, or the tax cuts, whatever you want to call it, that are being pushed through legislation, and we're going to get these tax cuts. Okay, so that we have to assume has been factored a lot into the market. The Fed and their future rate hike path is pretty much factored in, because we heard from the Fed what to expect for 2018 just this week. So what else do we have to look forward to? I'm not really too sure, but I think that this tax plan could at least feed us into a rally going into next week. So next week we might be able to rally towards 95, which would be the previous high here, or 95.20, and maybe as high as 96, maybe over the course of the next week or two, going into the beginning of the year. But what about after that? Well, just remember, other central banks are starting to normalize their rates as well. And if they become more hawkish, maybe that's something that's not so much factored into the market. Maybe the dollar could find a top somewhere around 95 to 96 over the course of the next couple of weeks. And so the way that I envision it is the dollar positioning in the dollar. We just saw the CFTC data at the end of the week suggest that speculative euro dollar longs are at highest levels, I think levels we hadn't seen since maybe 2014. So they could get liquidated a little bit, which could spur more dollar strength. So I think the dollar, in other words, could squeeze. We have this tax plan, we have end of year, maybe some repatriation. That could lead us to a rally for the next couple weeks. But once we get into the beginning of the year, and especially if we get above 95 in the dollar index and closer to 96, which would, you can see it coincides. There's two fib levels here. There are, and let me go ahead and just show you. There's 127% extension right here. There's also a 38% retracement. So you have this fib cluster that resides around 96. So if we get up towards 96, I might at that point in time start looking for dollar shorts, depending on what's happening, obviously, at that point. But that's the way that I'm viewing it right now. Now, the question you may have while you're at home listening is, well, Blake, why could the dollar rally? Or what do you see? I'm sorry, let me rephrase that. What do you see in the dollar that suggests that the rally may be limited? Well, that is a good question. And there's a couple things I am looking at. So first, I'm going to take you over to the bond market. I'm going to take you to the 10-year treasuries. If you look at the bond market, with the dollar rallying, the first question I have is, why isn't the bond market selling off more? Why aren't we seeing lower bond prices, higher yields? I mean, if you look at the price action on Friday, the bond market almost was unchanged. And that was with the dollar rallying. So even if the dollar rallies a little bit further, the question is, how much further lower is the bond market going to go? Everybody's bearish bonds. But if you get limited downside while the dollar is rallying, the bond market could find some support maybe in the next couple of weeks down here, and then reverse, maybe around the 124 handle. That's possible. What else suggests that the dollar's rally might be limited? Well, let's take a look at the gold market. Okay, whoops. Let's I forgot it's up here. Let's take a look at gold. You know, gold found a lot of support this week. We had a and if you are a ForexAnalytix subscriber, you're very well aware of what happened here. We had a here, let me take over the weekly chart. So we are at the 50% retracement of the entire 2017 move. 50% retracement. We are also at the 160 or 161% extension, sorry, of this move. 161% extension of that move. Also, the 78% retracement of that move. So there's a big Fibonacci cluster that we found support at earlier this week. Now, we've already bounced from that, and I would think that if the dollar continues to rally, gold might come back down towards 1240, maybe 1230. But gold does have a lot of support here. So if the dollar spends the next week or two rallying going into year end, gold might come down, bonds may come down, but they're going to find some support. And if they do, then at that point, maybe the dollar does peak, and maybe gold and the bond market do bounce. And that is kind of how I'm seeing things going into the end of the year. There's one more thing I wanted to talk about. We're getting into an illiquid part or time of the market. This is the week before the Christmas holiday, and then we have New Year's the following week. Liquidity is going to start to get really poor. If you guys have positions in the market, be careful. Okay, this is not the time that you want to be leveraging up big positions. This is the time where you want to be actually reducing position size due to liquidity issues. Things might get a little bit more volatile over the next week, especially towards the end of next week. Speaking of next week, we do have some data points that are coming out next week. Like we have New Zealand GDP on Wednesday afternoon, or actually Thursday morning in New Zealand. We have the BOJ decision also Wednesday evening here in North America. It'll be Thursday morning in Japan. We have Canadian CPI on Thursday. We have Canadian retail sales. We have US final GDP that'll also be Thursday morning. And then on Friday, we have the Canadian GDP, and we have durable goods, also personal income and spending, and PCE. So some data points going into the end of next week. So if you are leaving to go visit family or friends for the holidays and you're leaving a little early, just remember we have some pretty key data points towards the end of the week. Guys and gals, I hope you have a great trading week next week. If you like this video, please subscribe to our channel so you never miss one. And then also make sure you click the little thumbs up button at the bottom of this video on YouTube, just to tell us that you like it. And this way it encourages us to continue to film these for you every week. Guys and gals, this is Blake Morrow with ForexAnalytix. Have a great week. Have a prosperous week, and happy holidays.